All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw buyers were active and they actually pushed ES above yesterday's high, and then ES started bouncing in a range. And at this point, heading into the open, we're using 62 to 64 as the micro bull bear zone. And in order for the upside scenario to play out and for ES to go up and test the 70 half to 72 half and the 73 quarter all-time high, ideally, buyers have to hold ES now above the 62 to 64 area. And if we can hold above that zone off the open, then there's pretty high odds that we're going to go up and test, at the very minimum, the 70 half to 72 half. And then behind that, we have the all-time high at 73 quarter. Now, on first test of that zone, we can still get responsive sellers active in the market, but we have to be cautious shorting up there, because as ES heads up to initial resistance, buyers are going to be in control across all time frames. We're going to be very close to the all-time high, and we could break and make yet another all-time high today and potentially go up to the 77, 75 to 79, 75 zone. So, as far as shorting that area goes, that's definitely something that calls for caution. It's better served as a target on longs, and if you are taking a short there, then it's something that needs to work pretty quickly, and it may only give you 2 or 3 points of edge. So the question that we're going to be asking as ES heads up to initial resistance is whether the day is shaping up to be a trend day, right? ES has been bouncing in a narrow range for the last 4 sessions, and now holding above 64 would be a break above a short-term balance, which would bring the recent highs into play. And if there's enough strength in the market, we could just continue pushing higher. So, it's a good spot to take profit, or at least scale out of your longs. And if the market seems like there's not really this massive upside strength, if the AD lines are not as high as they should be, for example, as we test initial resistance, I would expect the NYSE AD to be above plus 1500. I would expect the S&P AD to be close to plus 400, if not higher. If that's the case, then you might want to scale out and hold for a push to new all-time highs. If the AD lines are looking kind of mediocre, or there's not really much momentum, then might just take the entire position off at initial resistance and then reevaluate. So that's one scenario, and that's the primary scenario that's in play right now. In the event that we break below 62 to 64, that would definitely be a red flag for buyers, right? That would be indicating short-term weakness. We would be breaking below the overnight balance, and we could get a liquidation, short-term liquidation, down to 59.5 prior VPOC, and then the 56 quarter to 58 quarter initial support zone. And at that point, we have to gauge, is there still enough strength in this market for buyers to step in at initial support and turn things around and then go back above the micro bull bear zone, right? So as we're coming down to initial support, we're judging, do we want to take a long setup here for a push up to the micro bull bear? Given the strength in the overnight session and given the overall bullish picture, we should get responsive buyers active on first test of initial support. And from there, the key is going to be, can price get back above 62 to 64? If we can't get back above there, then there's actually a risk on the buy side, and we can get liquidation down to 48 half to 50 half, which is the third scenario and the final scenario. It's currently the unlikely one, and we have to give edge to buyers. But when the overnight session is pretty strong and we don't get follow through in RTH, that can result in long liquidation, right? That means everyone who bought overnight expecting a breakout is going to be forced out of their position. And that happens on a break of initial support. So if we break 56s with any type of conviction, we could see a move down to 48 half to 50 half and potentially lower. When the market is looking very bullish prior to the open, that's really when buyers kind of have to step in immediately to continue and follow through with the upside strength. And if they can't do it, sometimes that can result in a complete failure and reversal to the other side. And then, you might even get a break of the bull bear zone of 48.5 to 50.5. So that's the final scenario, and currently that's not the one we're focused on. I mean, NQ is near its yearly highs. Things are looking good. The overnight balance is looking good. Everything's holding. So right now the focus is going to be on the long side, but if we start to notice that we failed the bull bear zone, we fail initial support, then we will get on board the short side as well, and try to hold a position down to 52, 48.5 to 50.5, and who knows, maybe more. But right now the main focus is really on the upside. This micro bull bear zone being key. Let's see how well the market holds here. Again, so far all the signs we're seeing are pointing to continued upside movement, and and that's why if it doesn't happen, a lot of people are going to be in the wrong position, right? They're going to be caught on the long side, and that's what can result in the liquidation. So you always have to think of this from the standpoint of the market participants, and kind of where are the pain points, where do people puke out of their positions and things like that. And the zones take all that stuff into account anyway, but that's the way that you should start thinking about these market scenarios, and especially in real time, right? It's easier to plan it out ahead of time, but then real time to gauge which one is in play and then trade accordingly. So let's see how well we hold this 62 to 64 area off the open. Ideally, we don't get much of a pullback and we just start heading higher. NQ is looking like it's going to be testing the top of its overnight range pretty shortly here. So things are looking quite bullish right now. So we'll stick with that scenario until sellers step in and prove it wrong. So the focus will be on the long side early in the morning. So let's see how we open, and we'll take it from there.